It's about that time of day again here, folks. Back in the action once again. Always great to be here with you guys and gals every evening on this nightly newsletter. Time to get back to work, though. Time to roll those sleeves up. Got a big opportunity setting up for Thursday morning's trading session. And, of course, it's Wednesday evening. It is June the 5th, 2019. My name is Joseph, by the way. And this, of course, is your nightly newsletter. Now, as always, guys, I focus on helping my clients find predictable, dependable, high-quality, profitable trade setups. And to do this, we use a simple 3-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is a little bit different. My job tonight is to identify the best levels, the best setups, and the best situations we're watching for tomorrow. That's Thursday's trading session. And boy, do we have a lot to cover here tonight. I've got some oil, some S&P, Nasdaq, gold, and euro on the schedule tonight. We're talking trade deals. We're talking inventory reports. I'm going to dive in here first tonight on the oil market because, boy, oil had the biggest inventory draw in 30 years today at 10:30. But I'll tell you, maybe I'm crazy, but I'm looking for a buy going back up into that range. Let's grab that crude oil here, that Texas tea, that black gold, because I know. I'm a bit of a contrarian on this, right? If you read the headlines right now, had that, of course, that trading range that we started off the day in, but shortly after the 10:30 news came out, market dumps lower, as you can obviously see. But obviously, right, what didn't happen, didn't last very long, right? That big bear market jumps with a 1, 2, 3 reversal. And so now we have a very strong move higher here. And obviously that strong move is where momentum is headed. I think this market's headed back up into that trading range where the day began. My only problem right now is of course, I've got a relatively strong move right back below that moving average. I'm going to put all these pieces together tonight, but I'm looking for a buy here right now, down around the low of this hidden channel. I've got two specific patterns I'm looking for here to trigger the entry on this back up with a target back up into that range. If I'm wrong about this and we slice through that battle zone, the objective is back to 50-60, but I've got to be very careful trying to sell down here. So maybe you know what I'm going to talk about here tonight, but tonight we'll talk about here how to sell it with a specific entry pattern so I'm not chasing it lower. And of course, how to buy it off the low of this channel. Got a great video for you guys tonight, and we're going to dig into oil. Right, we'll get knee deep in the black gold here tonight. But first, though, over on the S&P, of course, in a very interesting position right now. Now, pay very close attention here because the S&P and the Nasdaq are very similar, but they are quite different in one very important matter, and that is, you'll notice the S&P went up, and just like we talked about last night on the newsletter. Once the market started to show some blood, right? Once the market started to look like we were headed back down, what happened? The buyers came roaring back in. If you watched last night's newsletter on the topic of a short covering rally, you were ready to buy that dip this morning. So hopefully you were prepared and patient on that. But now, of course, we got this big rally higher. But look closely. Where are we? We are a pendulum swing off today's trading range right up at a level of resistance. So that level of resistance is a big problem. I don't want to buy high here right now. We do know we are bullish right on this market right now. It looks like they're trying to head back up into that trading range we talked about from last night's newsletter. And ultimately, I've got two spots I'm watching right now. I don't want to be a buyer at the highs here, right? I want to be a buyer on a pullback. I like the fact that we have a shot up, and I'm looking for, you guys have heard me talk about this many times before, but I'm looking for a very specific breakout pattern right now. I'm going to dig into more details on that here tonight, but I'm looking for a very specific breakout pattern pulling back in the short term. If I'm wrong and we collapse back down, don't get too aggressive on selling it because we're going to end up right back around the low of that range, and we'll look for buying opportunities coming right back up. So nice strong bull move, but look where we are. We're right into resistance. I've got one key pattern I'm watching for a long in the short term. If we don't get it, or if I'm wrong and it collapses, I've got another set of patterns I'm watching to buy the bottom of that range. So you definitely want to stay tuned on that S&P here tonight. Over on the Nasdaq, now, do you see the big difference? the Nasdaq still has room to go right now. And as the Nasdaq comes blasting higher now out of that range, anytime I see a market that moves right strong in one direction, I always know to look for a second leg. I've got my targets up here on that pendulum swing up around that 72.50, 72.55 area up top there. So I think that's where they're headed here right now. The S&P already got there, as you probably already noticed here tonight. But the most important thing right now is we know we are bullish. Nice strong run going higher. I don't want to buy high up here because it's a range, but we do have a nice strong run, right? And with that strong jump off the low of that range, I am anticipating, right, to get that opportunity to buy that pullback. I'm going to talk about some patterns to look for in here. I'll also talk about what you don't want to do in here, because as you get back into that range, right, you don't want to get sucked into the middle of that trading range either. So it's actually a really important setup on this shallow pullback. And again, if it does collapse back down in, again, don't get too comfortable down here, because we'll probably end up right back up into that range, right around that big round number. So short-term buying opportunities, long-term buying opportunities. I've got my targets. I know where I'm trying to go. We're going to talk about the patterns we're going to use to get into that trade here tonight on this newsletter. Over on the gold, boy, I must be really crazy here tonight, because I'm thinking about buying this gold right now. Buying the gold. Why on earth would you try to buy this market right now? Yeah, no, you're definitely right. It's definitely bearish as the market goes lower here right now. Quite a wild ride on the yellow metal today. But there's one really interesting thing here, and that is they never came back to retest the low. So the fact that we never made it all the way back to retest that low, it still means there are sellers who are still going to be hunting for that low, but there's also that little bit of pressure now going back into this range. Boy, that range is a sneaky one. And you know, anytime I have a trading range, that trading range acts like a magnet, right? And look at this, right? We go up, back into the range, we go down, back into that range. I've got one very specific reversal pattern that I'm watching for right now on that gold. I'm going to talk about that pattern as well. We'll also talk about if this market does keep going lower, because we've got a lot here, right? Get a lot of information from earlier on this week that will help us, give us a clue as far as how to trade this market if it goes lower. I'm looking long right now. I got a good pattern here to set up, and we're going to talk about that tonight on this video. Over on the euro tonight, boy, oh boy, we talked about this last night, right? We had that triangle on here. I warned you guys, we'd probably see a breakout, and that breakout would probably come right back down in, and that's exactly what happened. Well, now, of course, that big pendulum is swinging now back in the opposite direction. It's a range-bound market. I want to buy low. I want to sell high, right? I want to buy down here, but that's a lot of bearishness. That's a lot of bears coming in hard on this. So I think the best way for me to buy is I need to give the sellers the respect they deserve, right? I got to respect these bears, and then I've got one, maybe two different patterns we're watching for to get that turn back up into that trading zone here on, or inside the trading range, I should say, here on that euro. We'll also talk about, right, what to look for if you want to be a seller on this as well. It's going to be a little bit tricky on that one, but we'll break that down here on this euro tonight as well. So we are ready to rock. Wasn't the easiest set of charts to put together. Got a lot of head fakes. There are definitely some big easy clues in this, but there are also some really hidden little clues here that we're going to dig into a lot more detail here tonight on this video. Before I jump in though and put all of these together here for you guys, I always want to remind you, make sure you never miss another great video. And the easiest, most effective way to make sure you're always on top of our newsletter is to join our mailing list. I promise never any spam. I never rent or sell or do anything with this list besides just simply send you only the good stuff every single evening, every time our nightly newsletter goes live. And to join the list, it's very easy. All I need is your name, your email address, and then don't forget, when you hit that subscribe button on the right-hand side, your job isn't over yet. You've got to go in and check your email. And remember, sometimes our emails will end up in your spam folder. newsletter. So if you're expecting an email from us and you don't see it, it could be in your spam folder, your junk folder, your promotions folder, right, on services like Gmail and Yahoo. All right. So make sure you check your spam. If you don't see that verification email, find that verification email, because inside the verification email, I'm also going to send you a welcome list of all kinds of goodies so you and I can work together every evening on this nightly newsletter. So make sure you join the mailing list. That way you are the first to know when this newsletter goes live every evening. And then speaking of the first to know, if you watch this newsletter every evening, I am listening to your feedback. I really rely on your feedback. If you would, take a few moments of your time here this evening, pause the video, and give me some feedback on this nightly newsletter. What do you love most about it? What do you hate the most about it? If you could control, right, if you had control over this video, right, what would you do more of? What would you do less of? Which markets do you want to see added? Are there any markets you want to see removed from this newsletter? How do you watch the video? Do you watch this video the night before? Or do you watch it the day of, right? How do you use it? I'd love to know your feedback. Drop me some comments. Drop me that feedback in the comment section below. It means the world to me, guys, that you would take a few minutes out of your day to drop me a comment in the comment section below and let me know what you love, what you hate, and everything in between, because I am always, always listening to your feedback. And while you're down there posting that feedback in the comment section, give me a thumbs up on the video tonight, because that goes a long way at helping expose this video to other traders who can benefit as well. Speaking of which, don't forget, you can also call me in the office anytime you have any questions. You know, I'm kind of old school, guys, right? I actually talk on the telephone, and I really enjoy talking to all of you as clients of mine. So please feel free, pick up that phone, call that toll-free phone number. We also have a live support tool in the upper right-hand corner as well. We're always here. You can always reach that toll-free phone number if you have any questions about charting software, datas, brokers, the best market. Maybe you want to learn more about joining our free pass to attend our trade room or our free trading classes. Call that toll-free phone number to get more information. My wife Megan and I are always here to help every step of the way. But for now, though, we got some work to do here tonight. Let's roll up those sleeves, because we got a lot to talk about here this evening. Now, of course, today, right, or should I say tomorrow, is Thursday. It's June the 6th. And of course, we are battling through this first week of the month. I told you this week was going to be volatile. We had a lot of news coming out. We are still hearing about, today we heard about, obviously, the U.S. and China, their trade war going on, right? That continues to be a rub on the market. We also heard today about some very positive discussions happening between the U.S. and Mexico. Apparently, there will be a trade deal reached supposedly by Thursday. That seems to be a bright spot for the markets right now. We heard from the Fed today. The Fed kind of slipped up a little bit today and mentioned that they were considering lowering rates, which is what caused a lot of that rally, right, in the afternoon session here this afternoon. So we've got a lot going on right now between interest rates and trade negotiations. It's definitely a lot of different veins that are running through these markets right now and creating some really big explosive moves. Now, tomorrow morning, we've got another big round of news coming out tomorrow. Not just the scheduled news, but tomorrow morning, we have an ECB announcement. That ECB meeting, and of course the announcement, usually happens around 8:30, around 8:15, right, 8:30 Eastern time. So really all the big stuff tomorrow's right around that 8:30 block tomorrow morning. Typically speaking, the meeting comes to an end about 7:45 Eastern time, and then you'll start hearing Draghi hit the microphone 8:15, 8:30 Eastern time, right? That of course is in the afternoon, right, in London. So if you're trading in, or if you're joining us tomorrow in the trade room, we open up our trade room every morning at 8 o'clock Eastern time. We'll have a front row seat, right, for the aftermath of that ECB meeting, right? Of course, the announcement that comes afterwards, the press conference that comes afterwards. Now, in my experience, the euro and the gold are going to be pretty difficult during that speech and during the announcement, during the press conference. So obviously, I come in every morning with an optimistic attitude. I'm always very optimistic about every session that we trade in our trade room. But I am realistic, right? I am realistic. And tomorrow, if we do see gold and euro responding accordingly, a lot of times markets are jumpy, they're impulsive, they don't really hold levels of support and resistance during this time of the morning, especially right around the ECB press conference that follows. So just keep it in mind tomorrow. If gold and euro, if they look like they're a bit hyped up and erratic tomorrow morning, you know what's happening because they're responding to the ECB meeting announcement that should come right around 8:15. Right, 8:30 Eastern Standard Time. And again, tomorrow morning we'll be in our trade room, 8 o'clock Eastern Time, like we are every morning. ECB is the big announcement for tomorrow. Everything is pretty much weighted towards that 8:30 block. We do continue to see big moves at 10 a.m. Eastern Time, just kind of one common thread we keep seeing in these markets. So continue to watch that 10 o'clock shock, as we call it, in our trade room. So 8:30 and 10 o'clock tomorrow. Keep your eyes open on that. And then tomorrow afternoon, keep an eye on this tomorrow afternoon. Tomorrow afternoon has the potential to really slow down pretty significantly tomorrow. Why? Because you've got that monthly employment number coming out on Friday morning. Remember, Friday morning is the first Friday of the month. That employment number, that non-farm payroll number is due out at 8:30 Eastern Time. And so, of course, on Thursday afternoon, things do typically slow down pretty dramatically ahead of that news report. So be aware of that tomorrow afternoon. And of course, I'll come back and join you tomorrow evening and we'll do our newsletter for tomorrow night so you're ready for, right, that employment number on Friday. Now, got our news under control. Let's jump in and take a look at some charts here for this evening. Jumping into the crude oil market first. We got a lot to cover here tonight. Oil, S&P, Nasdaq, gold, and euro. What are the most important factors on this chart right now? First of all, the day began inside of a range. And oftentimes when a day begins inside of a range, it usually ends somehow inside that range, right? And really the only way that markets break out of ranges is based on news. News is usually the only big enough catalyst that will break these markets right out of ranges. So we spent we spent yesterday and the most part of this morning kind of chopping around inside that range. Then we had that big news number come out. But as you can see, though, they couldn't hold it. So the most important clue on this chart right now is that trading range, and that is the magnet, right, for these buyers here tomorrow. The second big important clue is this strong move down. Now, anytime we see a strong move, anytime we see a strong move in any direction, we always expect to see a second leg. Now, it looks like those buyers got their hands on it here, right, later in the session this afternoon. But however, if those buyers fail, we know where they're trying to go. They're trying to go back down to retest that low and possibly from there down to that big round number. So we know we had a big, strong bear move down, and that strong bear move down, the sellers are trying to retest that low. That's a very important detail, which we'll talk more about here in just a moment. The third kind of component of this is what we really are using to trade with right now, and that is that 1, 2, 3 reversal. The 1, 2, 3 reversal, that's obviously a very strong move in its own, but most importantly, anytime we see a strong move right in one direction, we expect to see a second leg. I'm looking to participate with that second leg. But what else do we know about a 1, 2, 3 reversal? We always look for that hidden channel. Now, of course, this hidden channel really isn't a hidden channel at all. There is a bull channel that we form here. And what do we know about that bull channel right now? That bull channel is really, really narrow. Narrow channels almost always get retested at their extremes. So if this is a bull channel here, strong move, again, most time we see a narrow bull channel or a narrow channel overall, we usually see a retest at the very least, right, of that high. So we're definitely expecting to get that retest. Also, I can line up, right, these highs mark up that low. And as I mentioned earlier, anytime we see a 1, 2, 3 reversal, I'm always looking for a hidden channel. So I look for that hidden channel off those highs. I bring it down off that low. And this creates a great support level that we can use for a buying opportunity. So a lot going on here right now, as you can see. Like I said, there's a lot to look at on this chart. The range tells me we should go back into that range. Strong move down tells me if I'm wrong about this direction in the short term, they're going to run back down to retest that low. But in the meantime, though, it is definitely in our best interest to use that really narrow, right, that narrow channel, look for a support level that we can buy off of right now to be able to get that next leg going higher. Now, from here, we need to plan our entry. How can I use the short-term price action to try to structure a way ultimately to catch the sellers on the wrong side of this market? We know where we're trying to go. Let's clean this up. That way we have a fresh canvas to use here. We know where we're trying to go. Now, I've got my key level of support down here. I've got that key level of support that I want to buy off of. What I'm expecting here is I'm expecting with this relatively strong move down, I'm expecting sellers, you'll notice there's a little swing right here, and I'm expecting that swing to be where sellers are waiting now. You know, this will be about a halfway pullback, right, of that move lower. I'm expecting those bears to try to make one more leg lower. And once I have those bears trying to make that leg lower, then at that point now we know exactly where stops are. Those stops will be sitting right above those highs. And ultimately, my goal at this point now, right, is to buy right into those stop losses for that second leg higher. So as we go lower here, we see a shallow pullback in. I want to see that trap high, right? That run back down. Now I've got that support coming in. I know where stops are, and now I can buy into those stops. I can buy the pullback. And these, of course, be two of my favorite patterns here, a failure pattern into a pullback. This failure pattern is a little bit more advanced, I will definitely admit, right? It's kind of a little shallow pullback there, a trap. I do expect to see sellers trying to sell off that high. Once I see them coming in, now I know where stops are. I'm looking for a run through stops and then, of course, into that pullback, looking for two potential buying opportunities right now. One at the stop run and two at the pullback, which will probably be right around that same location, around the low of that range. Those are two setups I'm watching for, but keep in mind, it all revolves around getting that trap pattern, right? That's the key. We want to see these sellers try to take this thing higher or try to take it lower by selling, right, as it goes higher. Now, what if we don't get the trap, right? What if we don't get it? What if this market just simply runs up here right now? If it runs at this point, we know they're trying to retest that level. So what I want to do is I now want to use what I call a nested failure pattern, but I'm going to combine a trap low on this because I don't want to buy high. I'm going to look for one, look for two, and look for a trap on this. We call these nested failure patterns because it's kind of a failure inside of a failure, to make a long story short. We'll talk more about that in our training classes. But the bottom line is, if I can get these bears to give me one attempt to go lower, doesn't need to be a lot, but just enough to set the table here, right, for those bears to try again, I can then buy the little trap low as we go back up to retest the high. So that's if the market runs, right? That's if it starts running without me right now. I'm looking for some sort of trap pattern. And again, my big target is going to be, my short-term target is back to retest the high, but the big target is back up into that trading range. Now, what if I'm wrong about this, right? What if it just slices lower and starts making a run for it? Like I said, we had this big move down before. It wouldn't shock me. It would surprise me, but it wouldn't shock me to see the market turn like that into Asia. The big problem we have is, remember, the bears are trying to get to that 50-60. So if we end up getting a run lower here now, that will create another channel And really at that point, I've got a couple options. One's going to be using the underbelly of that hidden channel. That's a great option. But really what I'd like to do is I'd like to, if we can get this thing to run lower here, I'd like to find some sort of trap pattern here, some sort of trap high down here. Because again, as I mentioned in the introduction, I don't want to sell low, right? If I sell low down here, if I sell down here, I'm selling very close to where that objective is. And oftentimes the only way to do that safely is to do it with what we call a trap setup, right? And that is the same pattern basically as we were looking for on the opposite direction. So couple scenarios here, right? One scenario is, do we get that, right? Do we get that trap high? Get those bears to try to take that trade short, and then we can look to buy into those stops, right? Failure pattern, pullback pattern, and up from there, right? Or do we get it to run up, and then again, knowing where that objective is, right? We know better than chase. Let them look again. Wait for that trap pattern as we go higher, right? Trap low for that run back up, get the measured move, and back into that range. Or do we end up really running lower here? And if we do run lower, I've got to stay patient because I don't want to get caught, right? Kind of like musical chairs down here, right? You don't want to get caught with the only person without a seat when the music stops. You don't want to get caught selling low like that. The best pattern to avoid selling low or selling into support is a trap pattern here. So those are some great setups that I'm watching for here on oil. In fact, I have so many great setups that we teach and trade together every day in our trade room. I'm going to keep going though because I got a lot to cover here tonight on this video. But if you want a full breakdown of my 4 favorite entry patterns along with an overview of my 3-step trading strategy, I'll put a link in the upper right hand corner for our free trading class. I'll also put a big red button right below the video tonight here on the trading blog at Sideways Markets. Grab that big red button, grab the link in the upper right hand corner, whatever's easiest for you. Join that free course. You'll love the course. It comes with an invite for our Trade When You're Free pass. And don't forget, sometimes those emails, right? I'm going to email you that free course. Sometimes those emails will end up in your spam folder, so check your spam when you register. In the meantime, let's keep going though. Let's keep going. Got a lot more to cover here tonight, right? How about the S&P? How about that S&P? Now, again, we talked about this last night, right? That okie doke, right? Remember the okie doke from last night's newsletter, right? We talked about how that market would probably end up going sideways. And then once it started to look like those bears were in, guess what? Buyers come in and say, no. We're waiting to buy down here, right? Buyers come in and they just run this puppy with a nice big 1, 2, 3 reversal, right? 1, 2, 3. What do you do with that? You mark up those highs. You mark up that high. Wait a second. We've seen this pattern before. We've seen that. We talk about that pattern almost pretty much every evening on this newsletter, don't we? Incredible example of a 1, 2, 3 reversal into a hidden channel pullback. If I've talked about that once, I've talked about it a million times on this newsletter over the past 10 years. So we know the buyers. They are fresh, right? They are fresh off a nice profitable setup off of that low. And now look where we are right now, right? Obviously a range. Again, we were expecting a range today. It took a while to kind of get the range to kind of settle in, right? Whether you want to call it a triangle or a range there, it really doesn't matter. We came out of the range. The amount of the range or the amount of the move below the range combined with the amount of the move above the range. And look where we are right now. We're right up at that level of resistance. Now, what do we do at resistance? Well, we sell, right? We don't buy. We don't buy at resistance. What is the best pattern if you do want to buy near resistance? Trap patterns, right? Trap patterns. So we already know that. Right? We just talked about that, about the oil, right? The opposite direction on oil, of course. So we know we're at resistance, and we know that the best pattern in a resistance level like this is going to be a trap. Now, we also know that we have a very strong break higher here, right? A very strong break higher. Now, remember, we already learned about this. Anytime we see a strong move in one direction, the odds are pretty good we're going to get a second leg, right? So we know we're looking for that second leg. The problem is we don't want to buy high because we're buying right into that level of resistance. Okay, so now we're starting to warm this idea up a little bit. The third thing I want you to remember is that whenever we look at a breakout, right? Remember I always talk about this? I talk about breakout patterns quite a bit on this newsletter. Most breakouts will fail. What are the two types of breakout patterns that we talk about here every evening? One of them, right, is the 1, 2, 3 breakout, right, where the market goes up 1, pulls back 2, and goes 3, right? That's kind of your conservative breakout. What do? We mark that. We mark that, we find that hidden channel, right, and we buy that pullback. So obviously that's a setup that we're watching here for tomorrow. But what's the other one? What's the slightly more aggressive one? It's called the 2-try breakout, right? It all starts with a real strong move, right? A strong move outside of that range. Once you see that strong move coming up, now let the profit takers take their profit. Let the sellers sell it short, right? This will be 2 tries ultimately, right? We use the number 2 quite a bit in our trade room every morning. You'll learn all about the 2-try rule inside of our free trading course that I mentioned earlier. And the key here is getting that little trap, right? What do we call that again? What was that called again? That's called the 2-try breakout pattern. It starts with a big blast higher. You see the profit taking first, okay? That's a shallow pullback usually. Then what's usually going to happen is you'll see sellers waiting just above that high to try to run it back down into that range, right? Smart sellers know not to try the first one. They try the second one instead. So I'm anticipating that you're going to see one more shot, right? One more shot here for those bears. And if I can get a nice strong signal with a trap, we call that what again? A 2-try breakout pattern. Now, ready? 1, 2, 3. Back to our chart now. Here we go. Look at this area right here, right? Strong move up. There's your profit taking. There's your higher high. See how it all comes together now? Beautiful. Now all we need is that trap. Get that trap low. So if you're in Asia, if you're in London, or maybe you're just a night owl here in the U.S., right, and you'd rather go trading instead of watching Golden State mop the floor again, right, with whoever they're playing tonight, right? I'm kidding with you, obviously. If you're in Toronto right now, I'm definitely rooting for you guys, but it's an uphill battle, isn't it? The bottom line is that's what we're looking for. Looking for that 2-try breakout pattern through that low. This puts together so many different components, doesn't it? Right? It's like a meatloaf, right? It's like a meatloaf strategy, right? You toss a little bit of this, a little bit of that, a little bit of this. You've really got to have a well-rounded education from these markets to put all this stuff together, and that's why we do it together every evening on this newsletter, because we all know there's money to make out there. But it's tough to learn to trade, and it's even more difficult to find people who are willing to share their knowledge with us, right? Which is why I always love sharing on this nightly newsletter. Now, that's the first pattern I'm looking for. Yes, it's a little bit aggressive, but the good news is a small amount of risk and a big reward. I've got a nice big target now. You'll notice here I've got a 1 leg, a 2 leg. I'm looking for that target up around that 28.40. If we really get this puppy cranking, I've got this 28.46 level overhead. What is that? That is the triple measured move from that big short covering rally. I won't bore you with too much of the details on this, right? But that's where that big measured move is. So I'm not sure if we'll go all the way to that 28.46, 28.50 area tomorrow, but I'm definitely sure going to help them, right, as best I can. Now, the other big concern I have is, well, maybe not a concern. I wouldn't say a concern right now, but, what if this doesn't work, or what if it just slices right back down into that trading range, almost like the euro? Right? We'll get to the euro in a second. You'll see on the euro in a moment here. But what if we slice back down through, right? If we slice back down through, now this becomes one heck of a bear market, doesn't it? Right? So if I'm wrong about that, or if it just collapses without it, right? If we slice right back through here now, let's zoom in on this a little bit, right? Remember, don't trade the middle, right? Don't trade the middle. So if we slice back down in, really what may happen here is we may see it go back down into that trading range. Okay, so there's one scenario. If we end up back inside that range now and we kind of settle in here a little bit, then what do? Well, it's a range-bound market, so I want to buy down here, right? I want to buy down here. What's the best way to buy that low? It's a 2-try failure pattern. It'll look a lot like that one right there. The bears try. They sell off the moving average, right? And you're buying right into that failure. Think about that pattern we saw just before lunchtime today, and that's similar to what we're looking for here tomorrow. I want to see it go down. We'll get that moving average to come over. Let those sellers try to sell off of it. We now know where their stops are, and we're looking for that run. Again, we're buying right into those stop losses. We call these failure patterns, right, for that move back up. Now that is if we get stuck inside that range. If we don't, if it just runs, right, if it just runs back down to that low, I mean, it could easily happen, right? You guys have seen this market the last couple of days, right? China says something, Mexico says something, Trump says something. Anybody, right, these days can move this thing around with the click of a mouse on Twitter right now. So if it does tank off of this high right now, we'll be back down to the low of the range, which is a place I want to be a buyer, but that momentum will be so strong at that point that we'll have to use a little bit more conservative reversal pattern or failure pattern called a nested failure. In this sense now, because that momentum is so strong, I'm going to want to make those bears try once, try twice, right? Once we see them try once, try twice, then we know all the sellers are fully committed. What I like to do is I like to draw a trend line off of that higher low and then make sure I'm buying right off of that trend line. Or even better would be if we could get a trap below that low, right? I mean, that would be even better, right? If we can get a trap off of that low. The bottom line, though, is on that particular type of pattern, if it does just roll lower like that, you're not going to want to buy it right away because it could do this, right? Where it pulls back and runs lower. So you don't want to buy it right away. You want to wait for them to try once, try twice. And again, if I can get a trap down here, it's not required, but boy, oh boy, would that be, I mean, that would be amazing to get it as a crown reversal there right off of that low. The bottom line though is if we settle into the range, the momentum won't be as strong when it comes down. Let those bears now try to sell off that moving average again, just like back here, right? Same kind of thing here. At that point, right, we know where stops are and we're buying into those stops. If it just collapses, though, obviously, now that momentum is too much. Now we've got to let them try a couple times, once, and again, once we get that higher high, that higher low is a huge clue for us. Right, it's kind of bear repellent, as I always say. Right, I kind of joke around by saying a higher low on that around the low of that range will keep the bears away. Right, it's bear repellent. Right, so what I'll do is I'll draw that trend line in and then try to buy off that trend line, or again, right, if we really get what we want here, it'll be that trap low right below that low. Those are called nested failure patterns. If we get a trap on it, it's called a crown reversal pattern. So we've really got a lot to wait for here right now. As you can see here, as I open up here right now, we're gapping down. So let's adjust this strategy on the fly, right? So we gap down here now at the opening bell. See what's happening, right? Gapping down. That gap down tells me most likely we'll come up and fill that gap. I've got the moving average coming over. As I see the market opening up in Asia, I now look for sellers to try to sell off that moving average, and now I know exactly where stops are, buying into stops, buying pullbacks to that next leg lower, that next leg higher, right? Failure pattern, right, into pullback pattern there. So we adjust it slightly there as we go into the Asian session here right now. Let those sellers sort of sell off that next pullback, and then we'll look for that buy, right, going up from there, right? It'll look a lot like this one right here, right? A failure, right, up, pull back, and go, right? We'll look for that back up here. All right, looking good here on the S&P. How's that Nasdaq looking here right now? Beautiful. So Nasdaq, same thing here right now, right, on the Nasdaq. Nasdaq, a little bit different, right, but very, very similar here this evening. Nasdaq is a range-bound market, right? Nasdaq is a range-bound market. We have a, again, pendulum swing off of that low. We know that pendulum swing up off of that high. We know the buyers are trying to get up to reach that pendulum swing up at 72.56 and change up there. I've got myself back inside of this range right now, and I really don't want to be trading inside of that range. Most important thing right now in the NASDAQ is that we know we have a bullish momentum. We know where the market's trying to go. They're trying to go up to retest that high. They're trying to get that pendulum swing. They're trying to get that measured move, right? That completion up around that 72.56. The big problem I have right now is I don't want to trade inside the middle, right, of that trading range. Much like the S&P right now, I want to buy off the low. I want to buy off support. I like this bull channel. I like the idea of buying it. The problem I have now is we're below the moving average. One easy setup is to wait and see these sellers try to sell off the moving average. That will hopefully clear me now above that range, and I can now buy into those stops, buying that pullback to finish off that move on the NASDAQ. Failure pattern, right, into pullback pattern. I wouldn't just buy it right now because you're back inside that range, but once we see this market, right, if we see this market pull back, test our moving average, bears try to sell into it. We know where their stops are now. We know that strong move higher tells me we're going to probably see a second leg. I know where stops are. I can buy into stops, buy the pullback. Again, pullback pattern, failure pattern, right, as we go higher. If we run now, right, if we run lower, very similar on the S&P here. If we run lower here on the NASDAQ, if we sit inside the range, right? So if we end up getting stuck inside this range, momentum is neutralized. That means I can look for a 1-2 try failure pattern. Again, look left. You'll see a very good example of that pattern. And again, I've got literally hundreds of examples of patterns just like these, right, inside that free course that I mentioned earlier on in this video. So again, we know the market is bullish into a trading range. We know the short-term, right, move higher here tells me we're going to probably get another leg higher. If I can get a failure pattern off the moving average, failure into pullback. Those are two setups I can watch for right now in the NASDAQ. If we keep going sideways, right? If we keep going sideways, that negates momentum, which means I can be a little more confident in buying it aggressively, right? Get that off of there, get that off of there. You know where those are now. If we are going sideways here for the short term, look for this market now to try to break out. Look for that moving average to come over. Look for those bears to try to sell off the moving average again, just like we saw back here, right? Then we know where stops are, and we can buy the break. We can buy the pullback. Two easy setups, failure patterns into pullback patterns for that rise back up. If we don't sit, right? If we run, right? If this thing runs lower, now that momentum is so strong. Again, we're not a bear market at that point. We're still a range-bound market with an overall bull bias here right now on the NASDAQ. If we do end up slicing lower here in the short term, that momentum will, yes, be very strong to the bear side. I'm going to respect those bears, but at the same time, I'm looking for the 1 try, the 2 try. And again, like I mentioned, right, draw the trend line, look for the buy off the trend line, or if we really get lucky, right, it's a crown reversal off of that low. So very similar in that sense, right, on the NASDAQ to the S&P. But again, there's one big difference right now between the S&P and the NASDAQ, and that is a retest of that high, right? The S&P got that retest. They got their pendulum swing. The NASDAQ hasn't got it yet. So the S&P has to look for that trap. The S&P needs to pull back, right? Or it's got to keep going for us to have confidence, right, to buy this thing. The NASDAQ, we just have to get out of this range. And so really, I'm looking for that move up. I want to see those bears try to sell it back down. If they do, now we know where the good stuff is. Failure, pullback, right? And again, we've talked about that quite a bit tonight already on this, right, on this newsletter. Looking good on the NQ. Let's keep going. How about some gold right now? Looking at gold right now. Oh, they're giving away my strategy. I know I seemed crazy here at the introduction tonight on the gold, and I probably am a little bit of a touch of crazy every once in a while. I'm sure all of us have a little bit of slice of crazy inside of us here and there. But the bottom line is gold had a big, strong run up, right? Almost as big of a strong move back down. There's one huge clue for me, though, and that is the fact that we didn't retest the high or the low. You know, anytime we see a market that moves like this and then completely deteriorates, there's one goal, right? There's one goal. These sellers had one goal. That's all they had to do was get back down to retest that low, but something was standing in their way, and that something is probably the price magnet right in the middle. I was sitting here this afternoon kind of scratching my head going, what happened? Why didn't they finish that move? Because, you know, if you've been doing this for a while, you probably have, probably already seen this before. You know, when a market goes bullish and collapses like this, it's like a magnet just draws it right back down to retest that low, right? This is just the way, it's like the S&P did today, right? It went up, came all the way back down, taps that low, and then right back up again. What happened? They missed it. So that, in my opinion, it's not what did happen, it's what didn't happen, right? It's kind of what didn't happen that is the biggest clue right now. That prompted me to kind of look at this and go, okay, what am I missing right now? And of course, a little bit of hard work on this. But, you know, you can see that range right in the middle here. Okay, so we know that we want to sell high, we want to buy low. We're trying to go back up into that range right now. Now, the hard part right now is with that big bearishness, right? That big bear move down. So we've talked about this quite a bit, right? We just talked about this on the E-minis. When I have a strong move, right? When I have a range like this, and you'll see on the euro in a second here, right? And we jump and then completely collapse back down like that, right? Again, I can measure the distance off the high, the distance off the low. That will usually be symmetrical. It's not required. I'll be very honest. It's not required, but it usually will be very, very close to that pendulum swing. The problem is, though, momentum, right? That momentum is really strong, and you've got to remember there are going to be a lot of trend followers in here, you know, selling the 38.2, the 50%, you know what I mean? There's going to be a lot of bears that will try to sell into that pullback. So what I've always seen works best is instead of just simply trying to buy into a failure, which is what I would normally do, with momentum so strong like this, what happens a lot of times is you'll try to buy right here, right? You'll try buying that failure. Come on, Joe. It's just English, buddy. There you go, right? And then go up, and then you'll see what'll happen is if you try buying right there, having some fun with you guys here tonight, right? You try buying right there, what's going to happen? The bears will come in, and they'll hit you again, right? They're waiting right above that high. So in my experience, it's much more reliable. Skip that first buy, let it go higher, draw that trend line off of that low. That creates that support area. Let them come in, right? Try to buy this. And then I talked about this last night, right? At this stage now, your biggest asset is buying as low as you can get. It is. Because you've got to remember, as it goes higher, you've got more sellers, right? So it's always very tricky. Sometimes the market will really run and just got to wait for it because you'll usually almost always see another attempt here for those bears. Right? They'll come back in. And then once it gets that pullback, that second try now it's one try for the bears, two try for the bears, then you've got that potential now. Again, your best bet right now is to buy where the sellers don't dare go. You know, we talked about that, right? Kind of the bad guy hunting down the good guy, right? Last night, that horrible analogy I gave last night in the newsletter, right? This is the only little nook and cranny on the chart where you can protect yourself against those bears, right? Because the sellers are going to be here, they're going to be here, they're going to be here, right? Where won't sellers be? professional sellers, they won't be down low. They won't be down right at support. So ultimately, that's what I'm looking for right now on this gold right now. Now, it may not pull back all the way, right? It may not pull back all the way. We may see it run up like this into that range. And if it does keep running, what I look for is a trap. Right? If it keeps running up, right, look for a little trap pattern there. Again, you're trying to buy as low as you can here right now. So as I watch this, right, there's my range. We go up and then all the way back down, right? You can definitely tell it's not a pendulum swing, right? It's definitely not a full pendulum swing. It's close, right? Again, it doesn't need to be exact. Most important thing, though, is strong move down. Bears have tried once. I draw my trend line up. And now, again, I'd love to see another move down here to be a buyer off that low. Again, that's where I can have as much of a guarantee as I can that we're not going to see that many sellers down there. You're going to be in the minority if you're selling down there. You don't want to sell down there, by the way, right? But you want to look for that buy coming in off of that low. Does that make sense? Right? I think if you look at the kind of the, it's I would say it's common sense, but common sense doesn't work in trading, does it? Yeah, do the opposite of common sense when it comes to trading. Unfortunately, that's the way the markets work. It doesn't really pay very well just to use common sense in trading. But I think when you look at it that way, with the momentum being so strong, right, let the bears try once. Make sure you wait for them to try twice, and then try to kind of get yourself as low as possible down there for that buy. Either that or up and that trap. Right? Little trap low here. A trap low will work, right? A trap low. What I've done in the past is I'll take a half position, right? A half position on the trap, right? Half position on the trap, right? Half position off the trend line, you know what I mean? Right? Kind of scale into it. That way you've got some wiggle room on it if it does keep pulling back, but that will give you the ability now to buy back up. And then where's your targets? Well, you're obviously your big reliable targets back into that range. But then the pendulum swing, the amount of the move below, the amount of the move above, right? My runner target would back up around that, 34, what's that, 46.8, right? That 46.8, right? That will be your runner target as it slides back up, right? Again, into the range and then through. So if we get into that range right now, what are my options? One option would be we look for a straight failure pattern. So if we don't get the entry here, right? If we don't get that pullback to buy off it, if it ends up back inside that range, stay away, wait. And then what? Look for either one or two scenarios. One would be a pullback, get that failure, right? Those bears to sell it. Again, that trend line should still be there. Again, that bear repellent, right? There's your failure pattern and back up. Just don't trade the middle of that range, right? Just don't trade the middle of the range. The range is going to be a little bit tricky there as it comes out of that middle. So that's going to be a very important part of that puzzle. If it just runs back up, right, then obviously at that point now we've got a couple things we're watching for. If it really runs back up, we can probably get a failure pattern off that high, but you just want to make sure you wait because it'll be such a strong momentum move. Let them try once, let them try twice, and then back down. Or keep your eyes out for a full-blown breakout, right? It goes 1, 2, 3 reversal. If I can see them pull back to that moving average and hold that pullback, I have no problem, because anytime we see a strong move like that, you're going to probably get a pullback you can rely on. Find that hidden channel, right? And we can buy it up from there, right? Again, just like we saw earlier in today's trading session. Just like this one, right? This is a great example back here, right? We see that 1, 2, 3, right? There's your 1, 2, 3. What do? You mark up, right? You mark up that high. You find that low. I'm not making this stuff up, right? I mean, that's exactly the pattern you look for going higher here. And see how the price pulls back, right? It pulls back. The bears try to sell off the moving average, and then whoop, right back up. That pattern right there, right? That pattern right there, or over here. Now, obviously, we've got to see a strong move, hold the pullback. We've got some waiting to do, right? But that's going to be another setup we're watching for here on gold. And again, we're getting lucky here tonight. Get a lot of really good examples right on the chart. But these types of patterns are easiest to learn when you actually see them developing, and that's really the goal of that free course that I mentioned earlier. I'm going to send you a bunch of chart lessons where you can kind of see how we apply these strategies right on a real chart. So grab that free course. You'll love it. And again, be ready there right on that gold. How about some euro? So the euro, you can probably take it from here. You probably already know exactly what I'm going to say on this euro at this point, but let's just fill in the blanks though. It's a range-bound market. This was a triangle in last night's newsletter, if you recall, right? It was a triangle. We talked about how triangles love to break out. They love to fail and come right back into that range. Well, obviously, they did not take a pit stop inside that range. They just slammed right on through. As they slam through now, look at that momentum. Right now, obviously, pendulum swing is in play here right now, so it may keep going lower. If you want to be a seller on this, how would you sell it? It's a dangerous sell, obviously, because you're selling right into a support level here, right? But a sell on this, what you want to see is you want to see that failure, right? Get those buyers coming in, try to buy that pullback. That will be your failure. That's one of those patterns that I would recommend, maybe a half-size position, maybe a quarter-size position, and maybe close one eye and stand on one foot when you do it just for good luck, right? Rub your lucky rabbit's foot or something like that. Not a very reliable pattern just because of the location of it. What I'm watching for here right now is I want to see those bears try once, try twice. And again, the bare minimum would be off of that trend line coming up, right? Buying that support level. You always want to buy at support. And again, that's where you'll have the most amount of protection away from those bears. Or if we can get that trap pattern here, that 1, that 2, right? That becomes a crown reversal pattern and a very, very reliable setup here if we can get that trap. I really want to get that 2 try here for those bears. What if it keeps going? Right? What if it keeps going here? We get that big round number down here, right? 12,000, that 12,000 big round number. If it does keep going lower, at this point, we've got to call a timeout and wait for more information because it may just go once, twice, and then right back in. It may also end up going sideways around that big round number. And at that point, if it spends a couple hours going sideways, it is now a bear market with a range, which means we're looking for that 1 try, that 2 try, and that sell back down, right? It's the same basic failure pattern. We'll look for it on the sell side. But that will be deep into the session tomorrow, right? That'll be after we've already seen this market go comatose, right, around that 12,000 big round number. My only concern here on this euro is you've got Draghi, right? You got Draghi speaking tomorrow morning in that press conference after the announcement. So both gold and euro are definitely going to be on my short list as we get closer and closer to that announcement tomorrow morning. Again, should be around 7:30, 7:45 for the announcement into 8:15. And then usually it's about an hour-long press conference there. And I mean, there's very little we can do to predict and anticipate how the market will react to that market, to the news tomorrow morning once it comes out. But no matter what, no matter what we get tomorrow, I've got a great plan for us, as always, right? We've talked about all the markets tonight. We get some crude, E-minis, gold, euro. Tomorrow morning, we open up at 8 o'clock Eastern time. We'll have a front row seat for the news comes out tomorrow about 8:30 Eastern time, and I want to see you there with me. You know, we all know there's great profitable opportunities every day in these financial markets, but as you saw today, right, and we talked about last night on the newsletter, it's all about mindset. It really is. It's can we stay disciplined when things don't make sense? Can we stay confident when things are moving fast? Can we stay patient when things are moving slowly? That's exactly why our trade room is such a great place to come in and learn and earn with us. Because, you know, again, like I said, there's plenty of opportunities. It's just having somebody there with you to guide you in the right track. If you want to come out and join us tomorrow morning, 8 o'clock Eastern time, right below the video tonight, right here on the website, there's a link for our advanced course. Grab the advanced course. I've got a one-time enrollment. We have flexible payment options. Call me in the office and we can talk about those options for you as well and get registered for tomorrow morning's trade room at 8 o'clock Eastern time. If you're not ready yet to be a member, that's fine by me. Check out the free trial. It's right to the left of my ugly mug. That free trial right there, I think, is the best in the business. It's got access to our trade room on a free pass. It's got our free trading classes and, of course, hundreds of chart lessons that you guys will see lots of examples. We can learn those patterns we talk about every evening on this nightly newsletter. But that's tomorrow, though, right? That's it for me tonight. And as always, guys, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.